Okay, love, I know that this is scripted for me, but you have no idea what we're going to talk about. But I'm so excited because, like, you always know what you're talking about.
Stop it.
And just, I know they're going to vibe with me and I know that we're going to kill it, but I'm excited to see what you're going to say.
Okay, I'm ready.
Love you. Welcome to the Funding Table podcast, where we talk about real estate, lending, marriage, faith, and real life here in the heart of Texas. I'm your host, Rosie Maya.
And I'm Sammy.
Thank you for coming back. In this episode, we're going to talk about outdated information. According to a survey that Lending Tree did, 41% of Americans still think that you need to put 20% down. Can you believe that?
That's crazy.
Yeah.
That's too much.
Wait, and I know somebody's out there thinking, oh, 20% of the sales price of a house, fair. You know, it sounds fair because you're not paying 100%, but 20% is a lot of money. Let me break it down to you. If you're looking at a house of 300,000 sales price and you're the one thinking that you need 20% down, you're saying that you need $60,000 to put down on a home?
It's a lot of cheddar.
That's a lot of coin.
Hey, if you got it though, I mean, props to you.
Right? But why spend a lot of reserves on a down payment?
Sure.
Right? 20% down. I mean, that's a lot of money. We have investors coming in with less than 20% down.
Yeah. Sometimes investors as low as 15.
Right?
Yeah.
And for a first-time home buyer to think that you need 20% down, that
That's a lot of money.
is a lot.
I'm sure that could deter a lot of people from coming into the market and purchasing a home. There are programs that have been developed for first-time home buyers to specifically not need that 20% down.
Right.
That is definitely outdated information.
And in your expertise, what is the minimum requirement or what is the lowest down payment that you can get into a house?
Well,
Let's say as a first-time home buyer.
Yeah. Technically, there are programs for buyers to come in with as little as zero down payment. Now, I rarely ever recommend that. I would probably say that you'd want to aim for at least 3 to 5% of the sales price. And there are programs built for first-time home buyers, second-time home buyers, anyone looking to occupy the property. There are programs for you, good programs with good terms, with as little as 3 to 5% down payment. I would highly recommend those. I mean, if you have the 20% down,
Right.
more props to you. Go ahead and you want to park it in the real estate and you want to put it as a down payment, more power to you. But, a lot of people don't save that much or can't save that much and still want to acquire a home. So 3 to 5% down, I think, is a solid benchmark for anybody looking to become a homeowner, or looking to save to become a homeowner. That would be a really good benchmark that I would aim for.
For sure, for sure. I think it's a controversial topic, right? But even when we were buying our first home, we didn't go with a 0% down.
No, absolutely not.
And I always present it to my clients, but when it comes to the numbers and they really verify, okay, does down payment assistance work out for me better than bringing the minimum down payment? 99.9% of the times, my clients will go and choose the down payment route.
Bring in your down payment of
Yeah.
anywhere from 3 to 5%.
Just the numbers always make more sense for a home buyer. But like we didn't choose to do that. Even on our first time home purchase, we decided not to move forward with it because it just didn't make sense.
Yeah.
But I know that there's buyers out there that love it.
It makes sense for some people,
Yeah.
but not all people. I
Right.
would say that as a loan officer, we would be best putting you in a position to win and to be wise with real estate by getting you to put 3 to 5% down towards the sales price of a home. I feel that puts you in the driver's seat as far as, handling an asset like a property.
For sure. Like put some skin in the game, right?
Yeah, absolutely.
Have a little skin in the game. And you know what I really like? Scratch that. I really love that we're independent mortgage brokers. What does that mean? That means that we have racks on racks on racks of loan programs that can help first-time home buyers get into homes.
Racks on racks on racks.
Yes, and investor-friendly programs as well. That gets, like, let's say you want to become an investor. You're like, you know what? I want to get on a game plan to become an investor. We can help you out with that, and we have a lot of investor-friendly programs with that as well. The same thing goes with our first-time home buyer programs. We have clients that are like, you know what? In 6 months I want to buy, in a year I want to buy. Sometimes we have clients that are like, you know what, my credit is jacked up, but I need some help. And we can work together, collaborate, and build a game plan for them. That way, in the next 6 months, a year, they can purchase, and we help people achieve their home ownership
And
goals.
we've helped people that are 2-3 years out from being a homeowner. They say they need 2-3 years to get their taxes in order, to get their finances in order, to pay their debt off. And if you're willing to go that 1 mile, we're definitely willing to go 2 with you. So yeah, wherever you're at, whether you're an investor or whether you're a first-time home buyer and you need some help or you need some time or you need some guidance,
For sure.
we got a program for you. We got the time for you.
Yes, and we have an awesome team too. So that helps us, spend a lot of time with our customers and really game plan and make it seamless.
That's true.
For home buyers to get into homes.
That's true.
Yeah.
Regardless of where you stand.
Now let me ask you: do you think that it's wise for a home buyer to also save up for other expenses?
Like as a homeowner?
No, as a first-time home buyer buying a house. So, like, let's say they're gonna go with either down payment assistance or if they're gonna bring in their minimum down payment.
For sure. I think it's wise. You never know what kind of real estate market you're going to be in. There are things involved with a home loan, such as like closing costs,
Right.
earnest money, appraisal, things like that. And I'm sure we'll dive into more of what those are. But I would recommend saving up a bit more extra funds in case you're going to be on the hook as a buyer to pay for some of the closing costs, but also as reserves in the bank. You strengthen your application by showing you have some reserves in the bank, some funds in the bank. Even if you're not going to necessarily use it for the closing, it puts you in a strong place as a home buyer. And then not only as a home buyer, but once you complete the process, it puts you in a strong place as a homeowner to begin having reserves that you could rely on if, 5 months in the AC busts, or you need to repair this, or you need to
Yes.
repair that. It's nice to have the reserves kind of in line and in order, just in case any expense as a homeowner pops up.
Yes.
So I
Even if-
definitely would recommend that.
Yeah, and even if you do get a home warranty for your house, there are like service costs. So you do want to make sure that you at least have some funds just in case you do have to call your home warranty. But another thing too that a lot of buyers don't take into consideration are utility costs to switch over or moving expenses. I know that I get this all the time, and when I say all the time, it's like it blows my mind that this is a huge misconception out there.
Okay.
That 0% down means $0. Like, that's not true. Like,
Yeah.
it does not mean $0.
0% down just means as far as your down payment requirement,
Yes.
you would be bringing 0% of the sales price as a down payment
Yes.
up front. But there are still going to be closing costs with the loan. There are still going to be things you need to pay for up front, like the appraisal, like we just mentioned earlier.
Their earnest money to reserve the house.
Money to reserve the house. And depending on who you're working with in the transaction, you may have a ton of closing costs. You may have little closing costs. You may have some good negotiation to help you with closing costs. You may not have had the best negotiation to help you with closing costs. And so
Right.
it's definitely wise, I would say, to be saving up for those things. And remember that 0% down or down payment assistance doesn't mean that the closing costs are covered.
Yes, it doesn't mean $0 down, guys.
There are some programs, that can help with assistance to the closing costs, but still, even in that case, if you're getting some assistance towards the closing costs, you still could be on the hook for some of those closing costs. So it is wise to be saving your funds.
Okay, and what about the credit score? Like, what is the preferred credit score that banks are looking for?
Preferred credit score?
Preferred. Let's say preferred, not
800.
required.
800.
Okay. I mean, we love our 800 club because your homegirl is in 800 scores. But,
That's right. Give me some.
But
I would
know-
say, to take advantage of some of the first-time homebuyer programs. Is that what you're talking about as far as credit scores?
Yeah. Like, what is
Okay.
the preferred credit score to take advantage of these first-time homebuyer programs, or just get into like a tier where you're getting really good interest rates?
Okay. I would say to get you into the pricing, to get you into the top tier of best pricing and best rates and most affordability, I would really say you want to aim for the 640 and above credit score.
Okay.
That's going to be putting you in the driver's seat in the best position to qualify for some of these programs, to get better terms on some of these programs. Now, there is potential for you to still get some pretty good terms and, still be able to qualify with as low as, 600, 620. But I would say aiming for 640 and above kind of really puts you in the best position. But, even higher than that, if you could be 680 and above, I mean, now you're sitting a lot better. And then, if that score gets into the 700s, I think you're in a really strong position to show banks that you're wise enough to borrow and repay the debt.
Yes, I can see that. I can see that. And I think that a lot of buyers out there are looking for the lowest interest rates that they can find.
Oh, I mean, that's what 99% of my conversations are with home buyers is
yeah.
They want to know the rate. They want to know like what they can do to get the best rate. And so, as long as, and it does depend on who you're working with, but
yes.
I would say like at least with us, I would say, at a 640 and above, you're going to start getting access to some of the lowest rates on the market.
Yes. And if you are out on the market and you're already working with someone, make sure that you get an actual loan estimate. I know that I see a lot in my industry, good faith estimates, and it says at the top, this is not a loan estimate.
Fee sheets?
Get a loan estimate.
Get a fee sheet.
It's some bogus piece of paper. Like, get a loan estimate, guys. Please do yourself a favor, because you know that you don't know much about lending, but the person that you're working with knows about lending, and there's a lot of people that will take advantage of you. We're not those kind of people, but they're out there. So make sure you get a loan estimate. I would highly recommend for you to get that.
I repeat, get a loan estimate. Do not get a fee sheet. Do not get a good faith estimate. Get a loan estimate.
Yes. And you know what? If people get mad at this, I mean, if the shoe fits, it ain't my fault, guys. Okay? Like, do your job. But I want to ask you this question, right?
I'm excited. I'm ready.
I want to ask you, what do you say to home buyers that are like, you know what? I'm waiting for the interest rates to drop. I know that they're going to hit the pandemic lows.
I tell them I'm waiting too.
I know.
I tell them I'm waiting. I'm right there with you.
I'm like,
brother.
I'm right there with
right
you,
there
brother.
With you. Luckily, we got some really low rates when we were acquiring property. But it depends. It really depends on the kind of home buyer that you are. If you're like first-time home buyer and you're looking to get into the property that you love, that you're going to live in, you and your family, I say it's not wise to try and time the market. I say when you're ready, you're ready. Because if a better market with better rates come in the future, you can always be able to refinance and take advantage of the lower rates.
Right.
Now, if you're a property investor and you're looking for, cash flow, maybe a little bit of timing, not like to be so particular with the timing, because there are benefits to an investor, in a high interest rate climate. They could get a really good deal on the sales price of a home.
Yes.
And then as well take advantage of any benefit in interest rates later on. But again, it does depend on your market. So if the home prices aren't really coming down as much as you'd like, and, I could see why an investor might want to try and time the market a bit.
Okay.
But at the end of the day, nobody ever times it exactly correctly. And, lower rates means higher prices. And,
right.
So
that's one thing that I would also like to add into there, is that when you do start to see interest rates decrease, you're not the only one on the fence, right? There's so many other buyers that are on the fence and waiting for interest rates to drop. So you put yourself in a position where there's a lot more people now on the market, equals you have way more competition now.
Way more demand.
And you're not going to get as much as incentives or closing cost assistance when it comes to somebody else wanting that house, right?
That's
It's going to be the best bid with no closing costs.
I mean, think about it. When they were at when the rates were at those, historical lows, which I don't think they'll ever come back, to be honest. But when they were at those historical lows, I had clients that were 50, 60,000 over the sales price, asking 70,000. There was so much competition because money was so cheap to borrow. So the prices of homes went way up, and there was 10 bids on a house, 15 bids on a house. all way over asking. So
As is properties, they weren't going to do anything
no
to
repairs, no
repairs.
closing costs.
Yeah,
So
no closing costs,
there's
nothing.
some give and take when it comes to rates and
Right.
waiting and trying to time markets. One of them is going to get you either the price or the rates. And so I would say, if you could get a good deal like right now on the price of a home,
Right.
and working with a mortgage broker like us, you'll get access to some of the lowest rates on the market. And then if rates get better, you could just refinance. But
I agree. Yes.
and lower that payment and lower that interest, but you're never going to be able to change the price that you bought the home at.
Right.
And that's why I say, like, as an investor, it can make some sense to try and time. But, if you're a home buyer that's looking, buy your first home to live in, if you're ready, you're ready. If you're saving, you're saving.
Right.
If you're tired of renting, you're tired of renting. Do the best with what you can to get the home when you're ready. And then later on, if markets get better, we can take advantage of those lowered rates.
I agree. I think that if you're ready to buy a house now, do it. You never know what's going to happen in the future. You don't know if a collection's going to hit your credit, and then you went from a 700 score and you're now in the low 500s, and you're like, dang, now I have to pay a $20,000 medical expense to try to increase my scores.
Ain't that the truth?
You don't understand how many times this has happened to clients. Like, it's sad, but it's the truth. Like, you just never know what's going to happen. Like, you could, God forbid, you lose your job, and then you can no longer qualify. If you own the house already, you can lease it, or
especially if you're renting.
Yeah.
And next year landlord could take the rent up on you.
Yes.
But if you're ready to buy a house, you could stabilize your house payment. You could, keep that payment at $1,800 instead of like next year it's going to be $1,900, and then next year it's going to be $2,000, and then next year it's going to be $2,100. You could keep it at $1,800, and guess what? If the rates go down, it might start to drop. You can maybe take that payment to $1,700 a month or $1,600 a month. So especially if you're renting and you're ready. If you're ready, you're ready.
I agree. And when it comes to working with your lender, make sure that you're shopping around with a mortgage broker. And I would also say, right? Also, I would say that not all mortgage brokers are the same. It's like when realtors ask me, "Oh, you're a mortgage broker, right?" I did a lot with the girlies, right? So they're like, "Oh, you're a mortgage broker too," and I'm like,
Yeah.
Yes, but like it's like saying, "Oh, all realtors are the same," or "all guys are the same," or "all women are the same." Like that is
There might be some truth to it, but it's more than likely not true.
Right. We are completely independent mortgage brokers.
Working with a mortgage broker, a well-experienced independent mortgage broker,
Yes.
sets you up for the best chance to get the best numbers, the best chance for your loan to close, the smoothest experience. And as a broker, we do all the shopping for you.
Yes.
So you don't have to pull your credit over here. You don't have to pull your credit over there. You don't have to pull your credit 4 or 5 different times and shop around. As a broker, we pull it once, and we could shop with 50, 60, 70 different banks to try and get you
Racks
the
on racks
best
on
terms. Racks on racks on racks.
And remember that if you're a realtor watching our podcast, remember that people don't lose deals because of the funds. They lose deals because of the misinformation out there. So make sure that you're always getting educated, working like hand in hand with your lender.
Damn, that is spicy true.
Yeah, I mean,
lack of information is what jeopardizes a ton of different loans, a ton of different
Yes,
scenarios.
yeah.
Somebody telling a home buyer that they're ready, and then they're not ready, and then they lost money, and then they're out of the market. And
you guys, it happens so many times
I get 2 to 3 calls a week just on stuff like that.
to try to save a deal that it was never a deal. They
never
never
a
qualified, and
People losing money.
people are losing money left and right. So it
So, yeah.
really matters who you work with. It
Yeah.
really does. Like,
Let me repeat that.
Yeah.
Let me repeat that. It really matters who you work with.
I agree. Yes.
It is the truth.
Yeah, it's the truth. It's the truth. I'm sorry to say that, but yes, it's true. And if you didn't watch our last episode, what are you doing? Go watch it.
Go watch it. Like, pause, Wait. No, don't pause.
Finish. And then go watch it.
And then go watch it.
Yeah.
After you like this video and give us a nice comment down in the comment section, then go back, watch the video, learn more about us.
Yes. But thank you guys so much for watching. If you found value in this podcast and this episode, be sure to like, share, subscribe. We'll be posting new episodes each Friday, and we'll see you guys next time.
See you next time.